We have at 9:30, the market opens up and it's attacking buy side liquidity, which are these relative equal highs. And then we have that change in the state of delivery on the 15-minute time frame. That's this pink line right here. It trades up into that. You see that? So what are we doing here? We're getting a higher time frame premise. I'm giving you an entire complete trading model today, in case you haven't noticed that. We're going from a daily chart, and we're trying to get a feel for where it's likely to draw to. Where is it likely to draw to? Not just for today, but on a longer scale price run. What is it likely to go to? Where's it drawing to? Don't be afraid of being wrong on that daily chart. There's going to be lots of daily candles that go against this idea. And traders that are brand new or students that are brand new to this idea, they get their, emotions all whacked out because they have a day that just screams against that. And they think, oh no, I better change my bias. I better change the way I'm looking at this. I'm probably wrong. And by constantly referring back to the daily chart, it'll keep you in focus. So that way you're not going back and forth intraday, buying and selling, and second guessing your higher time frame premise. Okay, so my bias is bearish on NASDAQ. My premise is it's likely to start seeking lower prices now because we have an inside day on the body basis. Today's body of the daily candle is inside of Friday's range. So I'm expecting tomorrow or Wednesday's volatility to start showing one-sidedness in big down black closed candles. That's what I'm looking for my chart. Now, whether or not that happens, remains to be seen, but that's what I teach my kids. That's what I've been doing for 34 years. I'm trying to promote that idea as a student, to study price action with that view in mind, okay? So changing the state of delivery, we watch and see because it could go up into that gray box. Why? Because Monday's regular trading hours opening range gap is last Friday's 4:14 p.m. Eastern Standard Time regular trading hours closing price. That's what that price is up there at 25,079 even. That gray box is new week opening gap. So there's two things that could lead to this gravitating towards that going up there. Okay. So now the question is, you watched Cameron trade, and now I'm going to explain what I would have done if I were doing the actual trading and not sitting with him, and it was just me isolated solo, just doing my normal thing. I would do this. The buy side's here. It runs above that. As soon as we hit the change in the state of delivery, I'm looking at this up close price. That's rejection block. I'm going to wait for that to trade below it like we do here. And as soon as we get that here, I'm hitting that, and my stop loss is going to be mid new week opening gap. One contract. One, not six, like you see me do on my standard run. Just one contract. And then I would look to build another entry in it. Here, we have 9:30 opening. So that's the opening price at 9:30, which also is, in this case, Monday's regular trading hours opening range gap low, because 9:30's opening price is lower than that last Friday, 4:14 p.m. Eastern Time's closing price on regular trading hours. That means you're going to have to toggle that chart, which is not showing that now. It's electronic trading hours here. So you would toggle it to regular trading hours. We've done that so far in this live stream. So we don't need to do that now. The charts have been annotated. So all these levels here is what's on my notepad. You're all asking for what's on your notepad. Show us your notepad. This is what I'm putting on here. There's nothing secret on here. I promise you. Nothing except for this stuff. So once we started to drop off, it could still run that high. And as we're seeing it run up here, watch what happens. This high here with ES. So we go with EMES H2026. What do you see different here? NASDAQ had a lower high. See that? ES was pushing higher. It was pumping it higher, higher, higher. So this is SMT. So for your notes, when is there a high probability for efficiency using SMT related correlated asset? analysis. In other words, you're looking at ES versus NASDAQ. When is that appropriate? When am I even considering it? When there is a liquidity run or a high volatility injection like news. Okay. 930 is always going to act like that. 930 is running liquidity. The first 30 minutes, we're looking for liquidity for it to gravitate towards. In this case, we're seeing that Judas swing higher at 930. Here's 930's candle. It rallies up and it makes a high, higher high, higher high. Bull flag traders are going to look at that and fall in love. That's my Valentine. Kissy, kissy. But this is the kiss of death because we're going to go back to the NASDAQ. And see how it made a lower high here? So now, when do I use stop orders to get into a trade? Or when do I mark it in when I'm watching price action trade to and through a specific level? In this case, Cameron was prompted to watch that candlestick's opening price right there. When price was rallying up like that, I told him, I said, as soon as you see it trade through that opening price, as soon as you see it, enter at the market, sell your 2 contracts of micro. He put his little clicker on. You've seen him click on it. Okay. And just so you know, notice how I keep my chart centered. I'm very, very OCD about it. Okay. And it was driving me nuts, but I couldn't tell him to fix his chart. And I didn't want to touch the mouse. But as soon as he put the order in, I said, now it's going to drop a little bit. Give it a chance to drop. And then you're going to put your stop loss just below the opening price, because if it's going to run, it's going to rip through it real quick. And you can see him, he's hovering over top of the close button. He's indecisive. He don't know what he's wanting to do. And he's like, okay, when do I do it now, dad? And because he's used to fair value gaps. So now what I'm teaching him is sharp reversal patterns. And this is what we're covering today. Okay, so the topic today is sharp reversal patterns and using stop orders or market orders, not limit orders. So when am I doing that? Here we're seeing an SMT divergence. We have the change in state of delivery traded to on the NASDAQ. This high here, I'm going to see it fail. I don't need to get up here and short it. I don't need to do that. But I would have already been short on this candlestick right there with a stop loss at mid new week opening gap. If I would have got stopped out, no problem. I would have been waiting for another setup to see it break down and look for some kind of a fair value gap, some kind of institutional order flow entry drill, something that affect a bearish breaker. I would have looked for it to then also present a SMT divergence up here. If you're looking for SMT and it's not occurring, or if you're not looking at it at a time when liquidity is being taken with the express interest of it likely going another direction, opposite direction, or if you're not using it at the opening range, the first 30 minutes, you're probably looking for SMT in the most inopportune times. SMT is wonderful, folks. It's a wonderful idea and concept, but there's a place for it, and it's not in every setup. So if you want to use SMT, smart money tool, smart money technique, okay, I never really settled on what the T stands for. It's just the divergence between closely correlated pairs or assets. So if it's Forex, the same thing there. It's liquidity or opening ranges. Here, as it dropped down through it, you can watch the recording I posted on X where he put his little sell order in for his 2 micro contracts because his account has not had the withdrawal taken because he had to send them a bank statement. So you have to send the bank statement in, wait for them to approve it, and then you do the bank wire. And the process of doing that today, he said, let's just see if we can add a little bit more to it. And that's what he did today. So there you go. So now he's just underneath 13,000. So it's just like a couple dollars below 13,000. So basically almost 30% return in 2 weeks of trading, micros, and $3,000. So that's real money. Now, what does that mean for you? Nothing. Should it inspire you? No.